Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to be looking at Apple stock after their recent earnings call, talk about the future for Apple stock with the information we have today. I'll share what we know and my opinion on where the price is heading. Quick reminder that my stock picks and projections are just my opinion for your entertainment. However, if you enjoy Apple stock analysis like this and other stock market videos, please give the video a like, subscribe to the channel. Thank you to everybody for your support. All right, if you follow Apple stock, then you already know that the company's fiscal Q2 quarter was an absolute blowout. We'll look at the numbers very briefly, but bottom line, they outperformed on every segment imaginable, and it's really a good sign for Apple stockholders. There's just been a lot of uncertainty, particularly with COVID and Apple, and I would throw China on top of that, but they met all the expectations and beat them handedly, but yet somehow the stock price is still a little stuck in the mud. It didn't move very much. In fact, right before I started recording, I think it was down like 0.3%. Just here today. So the question is, like, what is the market expecting out of Apple, and why isn't the stock going up despite the fact that it had extraordinary earnings really the past 2 or 3 quarters, to be honest with you. We also have the new iPhones out, so that takes a lot of pressure off the usual product cycle. Is it going to get launched? What happens with 5G? All those things are in the rearview mirror. So let's take a look at Apple and see if we can kind of tell which way it will head in the longer term future throughout 2021. All right, so if you missed the headlines, Apple beat EPS by 42 cents, also beat on revenue. Looking at fiscal quarter 2 GAAP EPS of $1.40, beats by 42 cents. That's about 30% over analyst expectations. On the revenue side, you had almost $90 billion in revenue, guys, in one quarter. These FAANG stocks are really, really big, and they produce a ton of revenue, as you can see, but most notably plus 53% year over year. Obviously, you're kind of comping the key pandemic quarter there, but still very strong, and they beat estimates, which estimates would have included the fact that this is not as severe as a pandemic situation as last year. And even on the analyst expectations, they beat by $12 billion. And all the key segments were healthy. iPhone, $47 billion, basically 48, versus $40.8 billion consensus. Mac, $9 billion versus essentially $7 billion. iPad, $7.8 billion versus $5.7 billion. So all three segments, the key core segments, hit. Wearables, $7.8 billion versus $7.45, so that was a great job. And services up too. Here's another article that talks sales by geography. This is always important. America's up 35%, Europe up 50%, China, and this is a key one, $17 billion, up 88%. Japan 7.7, rest of Asian Pacific up 94%. Geography is a real key to Apple's continuing growth, particularly right here, here, and here, because, you know, if we go back about a year or two, there was some concern that some of the other Asian phone makers were stealing shares and preference from Asian customers, basically. And here we see a nice recovery over last year, so maybe some of those concerns have went away. All right, so fantastic quarter across all metrics imaginable. But what's interesting that I alluded to in the introduction is even though the stock did a little bump of about 4% after hours after the earnings, it's kind of like melted down even a little bit here heading into today. So, you know, a lot of people are wondering what's wrong with Apple stock. And I wouldn't say anything's like fundamentally wrong, but I'll give you some considerations to think about with this one. Number one is the price of the stock versus its valuation. We're going to dig into that in just a minute, but I'm going to cover a couple other topics as well. Number two is a problem that a lot of FAANG stocks or bigger companies are having right now, and that is the limited availability to buy other companies, right? Apple has plenty of cash. I looked at my notes. We've got roughly $69 billion in cash, and they make $300+ billion every year in revenue. So they can certainly afford to go out and buy something. But you've got regulation. You can't just pick companies off like you used to be able to. And then you have to think in Apple, they've spent a lot of time building their walled garden, right? They take that very seriously, and bringing in like another company, let's say Spotify, just to pick a name, whether or not that company fits into the Apple garden, the four-walled world, is really tough because they typically design and produce their own products. So a third-party acquisition doesn't always make sense for a company like Apple. And if you can't buy the growth, right, then you have to produce the growth. And the biggest challenge, of course, is trying to produce double-digit growth at the revenue levels that Apple plays at, right? So, a 1% growth on $300 billion is a ton of money. There's no way in the world that they could ever expect to grow plus 10% in a quarter, plus 20% is certainly out of the question. They're just in a different phase of their company. So obviously in the stock market, people are very keen on growth rates. We see companies like Tesla, for example, and there's a million others that can support plus 35% growth. Their valuation multiples are off the charts right now. Apple can't promise that or really even show a roadmap to it, much like Microsoft and Google and some of the others. So their valuation is always going to stay a little bit muted on an average level. All right, and another limiting factor to think about with Apple is now, here we are heading into May of 2021. So now analysts, they've gotten blown out of the water, right? Their expectations got trounced by Apple, outperformed across the board. So now you're going to get the analysts coming in saying, well, fine, what about 2022? So we're going to start looking at 2022 here pretty soon. And there's going to be a lot of folks who are asking, this is a great year coming off the pandemic. And we still have those concerns here today. Can they do it in 2022? You're going to hear that for a lot of stocks, not just Apple. And unfortunately, worry and doubt is a big part of the stock market. And I don't think Apple has anything intrinsically to worry about with their company, but they're always going to face the doubt of, hey, do it again, do it bigger next year. And if the analyst can't see that roadmap to doing it bigger and bigger next year, then you hit this wall. You sort of hit this glass ceiling of how high your stock can grow. All right, so let's take a look at the valuation history of Apple, okay? So price today at 133. Now, the forward PE today, with the new information we have, sits at 3185. If you look back, this is annual. We always look at annual because every year has a different challenge in a different situation. Obviously, last year, the world was in a much different place economically. Apple traded at a 30x forward PE, but you only have to go back 2 years to get in this place where Apple was well below 20 on their forward PE. So average valuation from a forward PE level, for Apple, I would say, between 17 and 20, not because that's the average here, but because of low interest rates and the fact that we are going to have stimulus payments and stuff going into the ecosystem. Some of that money will certainly end up in Apple's hands. So if you wanted to have like a conservative plus percentage for 2021, I would probably put the forward PE somewhere in the neighborhood of 20 to 25. And that's because I think eventually you have to get down to what Apple used to be in a normal world, but we're definitely not there yet. I'm projecting PEs do fall this year across the board for stocks. Not a collapse, but I think they start to head back to normal. So I'm going to say, just for fun on Apple, 25. I'm going to say a 25 forward PE seems about fair by the end of the year. All right, so let's keep looking ahead. We have current year 2021, average estimate from analysts who, oh, by the way, have been wrong several quarters in a row. 498 is the EPS estimate. You have a high, of 541. Now, keep in mind with all these numbers with Apple, we're already past Q2 on their fiscal year. So Apple's fiscal calendar basically runs like a Q4 through Q3. They kick off their fiscal year with, a standard Q4 on the sort of calendar view. So we have basically 2 quarters left to get up to a high estimate of 541. Now on my end, I'm just assuming that Apple keeps beating, right? I'm going to give it a bullish outlook. I'm going to say 550, which is higher than the highest analyst has right now. All right, so on my math, we're doing a 550 fiscal year 2021 EPS projection, right? $5.50. We looked at the valuation history, and I'm bringing that valuation down ever so slightly because I do believe that the stock market is going to slowly creep back to more historical means of valuation. So I set a forward PE of 25. If you take $5.50 times a forward PE of 25, you get, let me check my notes, you get $137.50. Now that price goes through the end of their fiscal year. What I'm predicting there is the end of their fiscal year. So keep in mind that that time period would end after September of 2021. It would probably be reported in sometime in October. So at that point, you'd be at 137.50 on my math, right? Or my projection. Now, if you want to go calendar year, you would include, basically everybody else's Q4, which is October, November, December, key holiday peak season for everything. And you would have to incorporate how much Apple beats what is their Q1 year over year during Christmas time, right? So maybe we add another $1 to that on EPS, something like that. It's really hard to tell this far out. And you could probably get to a reasonable valuation through the end of December, somewhere in the neighborhood of, let's call it 140, 145, something like that. On the flip side, if you want to say that the stock market keeps trending and valuations stay where they are today, people keep buying stocks, people keep valuing the earnings growth that Apple's offers, then your forward PE would sit around 30, which is today's portion, and then the stock price could get up to, say 180 or something like that. So if you're trying to plot the stock price, at the end of the day, what I do, that is the hard part, is I make an assumption on where the market trades valuation. The EPS on Apple, Microsoft, all these big companies, the EPS is kind of easy, and you can readjust it every quarter. So the EPS is kind of like constant, but the valuation, the PE multiples, the price to sales multiples, PEG ratios, those are determined by the buying activity in the market. So ultimately, it comes down to opinion of where do you think the market will be trading at the end of the year, and that helps you determine the price. Taking a look at TipRanks to see what the best performing analysts think of Apple after their earnings. Keep in mind that my projection was between maybe 137, let's just call it between 140 and 190. I'm much closer to 140 than most people because I think valuations go down. However, let's see what the pros think. They have several updates in here from yesterday after Apple did their update, and you've got almost all buys. There is a couple, a hold, and a sell, but mostly buys across the board. 175, 165. I'm just going to eyeball it at, let's just say 175 is probably close to the average in here. So analysts are projecting 175. That is definitely on the high range of my projection, but we'll just have to see who is right. One thing we can tell through all these stock projections, especially mine on the more conservative side of 140, 145, is that there's not a ton of room left for Apple to go this year unless they continue to outperform like they just did when they're hitting plus 30% EPS, plus 50% comps year over year. That kind of performance will drive the stock price up. But from a fundamentals view right now, I would say the stock is, arguably fairly valued. Maybe if you're a brand new stockholder, you try to nickel and dime it into the 120s on a market correction. I don't know if you're going to see that or not. So I'll just say fair value. Start your positions today. And then from a risk reward standpoint, if you're a new investor, you just have to ask yourself, can they keep growing and outperforming like this in 2022? Obviously, if you've been holding the stock for 10 years and you got it at like $50 or something, you have zero concern. I don't know if I would add at this level, but if you did, I probably wouldn't blame you because your average cost basis is still going to be way below the current price. All right, guys, so that's a look at Apple stock as of today coming off their earnings report. Let me know what you think in the comments. As always, give a like, subscribe. I appreciate your support. We'll see you on the next video.